Welcome back to the portfolio update videos. Currently, my stock portfolio is set at a combined value of just over 46,000 AUD. That's made up of the 18,612 USD in my stake portfolio, which is just over 29,000 AUD, and the $16,864 AUD in my Vanguard portfolio. Currently, the stock market has been trading down, and my portfolio for my stake position is only up 6.1% currently. My Vanguard position has also dropped under $17,000 as stocks has traded down. Looking through the overall S&P, this is the last performance across the entire market over the last 3 months, and you can see many of the major positions are in the red. Major staples of my portfolio such as Apple is down 11.3%, even positions such as Google and Costco is broken even. If you look after the last month performance, you can see things are a little bit more stable, and positions like mine of Microsoft has actually been up in the green over 5%. And when you go off the last week, it's been a horrible week for some of my investments such as Google, and then Costco again has broken even, whilst the overall market has traded up and down. Going through my portfolio, I did recently put a bigger investment in of $1,000, and I bought into a few positions. As you can see, I bought $171 worth of Apple, so basically one share. I bought $380 of VOO, so one share, and the remaining money I put towards Costco, which was $75. As I continue to grow this portfolio, my most recent addition that I've been putting in for is McDonald's. My value has now gone up to $736 and is actually 2.37% in the green. McDonald's recently did its earnings and has had a rough year, but I'm using this time to buy into a company that I see as a blue chip that's not going anywhere fast, and whenever I visit one, it is constantly full of people, no matter where I am, in my country or overseas. The stock has traded down 10% in the last 3 months, but is up just in the last month. I wanted to buy in at around 255 or just under 260, but my average share price is around 256. So as the stock hopefully rebounds up, I can get this and make the most of these gains. Going through my other additions, I bought in to Costco as the stock traded down. As you can see, my average share price is $494 in Costco, and the shares are currently sitting at $552, so I'm up around 11.63%. My goal with this position is just to continually add and grow the staple position like McDonald's a bit away from my other tech positions and diversify my portfolio. The stock has performed really well over the past few years and is up 47% in the last 3 years. My final purchase was in VOO. My VOO position continues to grow and is actually traded into the negatives as I was buying in the 400s. VOO is currently sitting at a share price of around $384 a share and is still up this year nearly 9%, but my overall position is still currently down 1.7%. My average share price is around $390 as I was consistently buying in whilst it was in the 400s. That's not stopping me from investing in now as I continue to grow my portfolio, and hopefully I can dollar cost average my average price down. I'm sitting at around 23 shares, and it is by far my biggest position at nearly $9,000. Overall, the goal with this portfolio is to keep VOO hopefully around 50% and then use the remaining 50% to invest in individual stocks that I believe in that can potentially beat the market or give strong returns. When assessing through my portfolio, one position I am disappointed that I did not sell out and capital a bit of gains in was JP Morgan. As you can see, the stock has traded down over 11.5% in the last 3 months, and I remember when it was in the 150s. My average share price is $140, and I owned 8.3 shares of it, and I was up a strong amount, close to 10% on this position at one point. The reason I own JP Morgan is, like I said, with the same with Costco and McDonald's, is to diversify a little bit away from tech, because if you'd seen any of my videos from a year ago or 2 years ago, pretty much 90% of my portfolio was tech, and even the S&P 500 is heavily weighted to the major tech companies. So if I can diversify a little bit away, it can hopefully stop the swings and I can get more consistent returns in my portfolio. With that being said, I did buy into Apple. The reason I bought into Apple is because it has been trading down and is down over 12.7% in the last 3 months. The stock had previously been trading in the 180s and much higher ranges, even here close to the 200s. And with the stock trading down all the way to 170 and me not seeing any fundamental changes in the business and they're still in a strong position, I thought it was a great time to buy in. My average share price is only $140 a share, so it is much lower, but although this is $30 higher than what my average share price is, I still thought it was a good time to buy in, as I'm not buying it at its all-time highs, and it's traded down, and it's a company I want to hold for the long term. Another company that I was considering buying into was actually Microsoft. Whilst many other stocks has traded down over the last 3 months, Microsoft hasn't, and has had an amazing year, up 48%. My returns for this stock is close to 25%, as I was buying in whilst it was going up. But that's not stopping me from looking at this stock and kicking myself for not buying in more whilst it was trading down at the end of 2022. Overall, as a Microsoft investor, it has been a bit of a mixy ride, with the great run up it had to the downturn to it going all the way back up now. And for myself, holding 4.49 shares, I do kind of just want to hold this one like Apple for the long term. Another decision I'm making is whether I'll sell out of Amazon stock. The position is so small at $56 that it's almost not worth having it in there. It's only 0.4 shares, and I have sold out of it previously, that's why it's gotten so small. That and Google were much bigger positions in my portfolio a while ago, before I'd ended up selling out of them, and they were actually in the green recently, and I could have potentially locked in some gains selling those and then allocating those funds to something like McDonald's or VOO. I might potentially still do that, but I'm going to wait for it to get into the green first and then assess from what I want to do from there. Looking at my Vanguard portfolio, I haven't done any major acquisitions lately, and I haven't actually been buying in. The only thing that changed is I did get my biggest dividend I've ever got, and that was for around $238. That's the great thing about this Vanguard position, is the dividend payments. Whilst I focus more on capital gains in my stake portfolio, in my Vanguard portfolio it's a lot more passive, and I'm just invested into these big large Australian ETFs where I can hopefully get dividend income and just store some extra funds here over storing all my money in my bank account. The goal with this position was to get it to close to $20,000 before the end of the year, but with it trading back and me putting money elsewhere, I think it's more than likely going to end up around that $18,500 or $18,000. Overall, if I can continue to grow these positions and continue to grow my dividends, I should hopefully be able to get over $1,000 in dividends next year, or even $1,500, and that money can just be reinvested into my positions as I grow them and grow the dividend payments. My next payment and my next purchase in this account will probably be VLC, as I try to get it to over $10,000. I still haven't made a decision with VHY whether I want to keep it or sell out and allocate those rest of those money into VGS, but I will make a decision by the new year. Going through the market, there's not been anything really big, and nothing has changed in my investing philosophy. I'm still waiting for things to dip, and as they have dipped now, I've been allocating extra and more funds so I can hopefully purchase in at this better price. I was a bit lenient on putting money into my stake position when I was up around 14%, 15%, 16%, but now things have traded down to 6%, and I still see the same quality in all these companies. I'm more than happy to put extra funds in so I can hopefully reap the rewards in 2024 as things continue to trade back up. Going through my Excel spreadsheets, you can see my allocation across both my portfolios and see how heavily my positions are weighted. As you can see, in my American portfolio, VOO takes up around 48%, which the goal is to get it to 50%, so I will be investing a little bit more as I try to balance out the portfolio. As you can see, Apple and Microsoft are my two biggest individual holdings, but my other positions hold around 6% respectively in the likes of Costco, JP Morgan, McDonald's and so on. In my Australian portfolio, it's heavily weighted towards VLC, and then the remaining 40% is made up of the other two. I plan to keep both these portfolios this way and slowly grow them. As you can see, I've tracked over the course of this year how my portfolios have grown. So starting from even December last year up until November now, you can see the strong steady growth in my stake portfolio, same with my Vanguard portfolio. And that is just the goal with these portfolios, is to slowly increase them, and hopefully I can get more capital gains, bigger dividend payments, and then I can use these funds to hopefully go towards something like purchasing property or just keeping them and having them as an extra way to build wealth. This was just a quick update in my investment into McDonald's, Apple, and VOO, even Costco as well, and what my plans are looking forward. Hopefully I can get my US portfolio to 30,000 before the end of the year, so just another 1,000 AUD, and then I can get my Vanguard Australian portfolio to around 8,500. But that was all for now. Cheers.